Welcome to the Winter Investor Relations presentation for Sound Energy. I'm Lyon, the Executive Chairman. I'll talk you through some of the slides, and Garry Dempster is with me, and he is our Chief Financial Officer, and talk you through the other slides. Well, here we are as Sound Energy in Morocco. We're fueling the energy transition, and the key points to bring out, as you will see, is that we have a large onshore acreage position within Morocco. In the east of the country, we have the Tendrara concession and exploration acreages, and the southwest of the country, we have the Sidi Mokhtar acreage. There's a strong demand for gas in Morocco. Since Algeria has cut off the gas to Morocco, Morocco is importing gas, and it requires its own molecules for its own electricity. We have a two-stage development of our asset in Tendrara. The first stage targeting industrial markets with a Micro LNG project, so we'll sell the gas as liquefied natural gas. The second phase, we'll be selling the gas into the power station through a pipeline. We've laid out a plan of how we're financing these developments, and we'll talk about those later in the presentation. The portfolio has plenty of upside, lots of exploration acreage in the area, and we're able to, once this infrastructure's in place, able to develop these projects very quickly. Our core of doing our business is with the environmental, social and governance model, and you'll see that we, as a listed company, adhere to all of these correct and appropriate ways of doing business. Here we are in eastern Morocco with the Tendrara license, a 25-year license. We are able onshore to phase the development, so minimize our capital outlay whilst we generate revenue for Sound Energy. The project will be targeting, as I said, two different markets: the industrial market with LNG supplies via our partner Africa Gas, and power via our partner ONE in the state power stations. Since Algeria cut the gas off, Morocco is required to import gas from overseas, either in the form of LPG or in the form of regasified gas from the European markets at a high cost. There's a great demand for energy in Morocco. It's a growing economy. It's a growing industrialized economy, and we are providing some of that market capability to deliver this energy to support the growth of Morocco, one of the fastest growing countries in Africa. We are committed to sustainable development, and our gas development is central to the Moroccan state transition energy plan of moving away from fossil fuels such as coal and imported LPG into a renewable basis, and pure molecules of hydrocarbon gas, domestic gas, will be part of that transition, and we're there to help deliver that. Our first phase of development is a Micro LNG project where we sell just over 4 BCF or 100 million cubic meters of gas a year to Africa at the well site. That gas will be transported by Africa through the road network into its off-takers. We've partnered with Ital Fluids, who are providing the equipment under a lease system with an opportunity for Sound Energy to acquire those plants after a period of time. Ital Fluids are financing a large majority of this development. Africa have also financed the capital required to offtake the gas, transport it and regasify it to its customers. We have all the approvals in place, and we'll be looking at revenues of around $30 million a year once this project comes on production in 2024. Phase 2 of our project targets the power market, and we have developed a plan for drilling for additional wells, putting a processing plant in place and a 120 kilometre pipeline to tie in to the GME pipeline that crosses from Algeria across Morocco up into Europe. This project is 300 million cubic meters a year and will generate around about $120 million of revenue. We are in the process of undertaking the final investment decision of this project, which we'd hope to do early next year. And this will be partly funded by debt funding from our local bank in Atijuafa Bank. But quite a lot of outstanding CPs, a formalised gas sales agreement with ONE, an EPC contractor, and the various approvals that are required. But I'll hand over to our CFO to discuss how the financing of that project will move forward.
Thank you, Graham. So we're making really good progress on the route towards FID, and as we've highlighted in the past, Phase 2 is the real motor for generating significant revenues within the company. Phase 1 on its own generates good strong levels of free cash flow, but Phase 2 is the real engine room for substantial revenue growth within the business. So we're very focused on delivering that project and taking it forward to FID in as timely a fashion as we can. The key step to enable that is getting the financing in place, and there's two components of that. One is on the debt side, and then the second is on the equity side. So as we announced in the market a few months ago, we entered into a term sheet with Atijuafa Bank, who are the largest lender in Morocco, and we've agreed with them a conditional offer for debt representing up to 65% of the capex to enable us to have the capital available to get the project towards FID. So we've got that agreement in place. We've got the terms locked in, very attractive terms at that, and we're now focused on satisfying the CPs to enable us to complete and close that financing package. So the key CPs there are getting the remaining regulatory approvals in place, obviously the joint venture taking a final investment decision itself, making some modifications to the gas sales agreement that's already in place. So we've got a good strong gas sales agreement in place with ONE at the current time, but the GSA itself needs to meet the lender's requirements in terms of bankability, so there's a few modifications there that are required. We're actually in ongoing discussions with ONE and the Ministry of Energy at the current time to try and bring about those changes. And then we need to get the engineering contract in place and the construction procurement contract in place. So we do need to do a degree of recycle on the engineering, because the previous engineering we did on Phase 2 was done back in 2018 and 2019. So we need to refresh that, ensure it's made more contemporary, and obviously it's reflective of the capital costs of embarking upon this type of project now as opposed to 4 or 5 years ago. And then we've got the equity component, so that's the second component of the financing necessary to take us forward to FID on Phase 2. We announced in the summer that we'd entered into a term sheet with Cal Valley, a Middle Eastern based energy player, and the intention from that transaction is for them to take an equity position in Sound Energy's licenses in Eastern Morocco. So that's predominantly focused on the development of the concession, and in accordance with the terms we announced, they will farm into the concession, taking a 40% interest in the concession. In return, they will pay the back costs for the Phase 1 project to date and the forward cost to bring that project forward to FID, but in addition they will fund Sound's share of the equity component of the pre-first gas expenditure on the Phase 2 development by way of a development carry. So a very attractive package that we've put together with Cal Valley. We're now going through DD with Cal Valley. That's taken a little longer than we would have liked, but it's a complex undertaking on their behalf, so it is taking a bit longer, but the dialogue's ongoing, and we're hopeful to close that out within the very near term. And then we'll move things forward, secure the debt financing through 2024, get ready to take FID, and then the first revenue should take place within 24 months after that final investment decision. So good progress to date. A few steps obviously remaining to successfully reach the key milestones necessary to take FID, but we're well on the way to moving that project forward to FID. So the focus obviously strategically has been on phase 1 and phase 2 and really moving forward that monetization strategy of monetizing via the produced gas that we have. And we took the conscious decision back in early 2020 to deprioritize exploration relative to getting the production on stream from phase 1 and phase 2. But exploration has always been very much in our sights because we believe it's got materiality, and more so it's got the opportunity to really add significant shareholder value to the company. So it was always about maintaining the focus on exploration, but doing it within our capital structure and doing it at the right time. As many investors are aware, we do have a substantial position in Morocco. We've got over 28,000 square kilometres of licensed acreage across eastern Morocco on the Anwal and Grand Tendrara licenses, but also on Sidi Mokhtar to the southwest of the country. And within those licenses, we've got an interesting range of opportunities, particularly in eastern Morocco, which is a bit more mature from an exploration perspective. We've got an inventory of prospects, leads, and concepts. We've high-graded many of those. So in summary, we've got 3 which are in our immediate sites. We've got SBK1, TE4, and M5. Those are on the Anwal and Grand Tendrara licenses. 2 of those are appraisal opportunities, so they've got a lower risk profile than M5, which is more what we classify as a wildcat exploration well. But as you can see from the numbers on the slide, the materiality of those is very interesting, and should one or more of those opportunities be successful, then it will make a material difference to the company going forward. But obviously what we need to do is bring in the capital to move forward with that exploration strategy, which is part of the deal that we've announced, the conditional deal that we announced with Cal Valley, whereby they will carry us on one of the 3 wells that's identified there. So they will carry us on the T4 Horst appraisal in return for taking an equity position in the license. And then from there we can hopefully build and grow the exploration opportunities by way of further drilling thereafter, because success tends to breed success. And we really do hope to move forward with unlocking the potential within the portfolio. And just as a reminder to many people familiar with the Sound story, in terms of the unrisked in-place gas potential across the licenses, we're talking about around 28 TCF. So it's a very large number. I should caution again that it's unrisked, but the opportunity is clearly there when we have the capacity to move forward further with that exploration strategy. So in terms of the key activities that we're focused on now and going forward, we've got phase 1 activities ongoing on the site and off-site. So that project is well into the project execution phase, as Graham mentioned earlier. The next steps are erection of the LNG storage tank. We've got the key parts ready for erection. Those are sitting in Morocco and in Spain. So in early 2024, the intention would be to actually start constructing the skin of the LNG tank itself. And in the next few weeks we'll be starting the work scope related to the wellhead. So we're replacing the trees on T6 and T7. These are 2 existing wells, so we're not doing any further drilling activities before first gas on phase 1, but we do need to replace the trees. So that's going ahead within the next few months. Or a few weeks I should say. We are also in the process of closing out the EPC contract for the flow lines package, so that again should be closing within the coming weeks, and then we'll go through the engineering procurement process related to the flow lines. And then we will receive the skid-mounted units, which many of which have been fabricated already. The cold box is sitting in Louisiana, waiting for shipment to Morocco. So as the other skid-mounted units near or reach completion, I should say, then those will be transported to site, and then of course they will be integrated, connected to the remainder of the facilities and getting us ready for commissioning through 2024. And then phase 2, the key steps there I've mentioned just on the previous slide. It's really about closing the financing package for that, amending the GSA, getting the EPC contracting strategy advanced, and undertaking further engineering, and really doing all of the steps necessary to take a robust decision towards FID in 2024. Exploration, again, as I mentioned, we've got lots of potential there, so the intention would be if we close the transaction with Cal Valley, then we would embark upon the T4 appraisal well in 2024, and then we can tackle further opportunities thereafter. And then of course we do remain focused on strengthening the balance sheet, and we've done that successfully over the last period by settling what was a disturbing tax case for the company, and I know that was a real concern for many investors in the company. So we took the decision to settle that at what we believe is a very reasonable level. It was a liability, or a potential liability, of almost $24 million. What we agreed with the tax authority was a settlement whereby they would withdraw all of the cases, and I should add, cases that we thought did not have any substance. But we felt that we should settle, but it was in the best interests of shareholders to do that, and the terms of the settlement were a series of payments totaling $2.5 million over the next 6 years, and much of the payment of the settlement is actually back end loaded, so again it fits within the current capital structure of the company. We also made some progress on settling the receivable position we had with ONHYM, so they were a bit behind schedule in terms of paying their bills on the concession, so they settled the outstanding cash calls by way of almost $4 million earlier on this year. So good progress made there, positioning the company financially going forward. In terms of growth, we are still growth focused, both organically and inorganically. We very much believe in the energy transition strategy that we have, and the opportunity that enables us to take and to build going forward. We've got good, strong relationships in country, we've got regional knowledge, and that implies the opportunity to build out the sound energy position from where we are today. We've got a good position in terms of licensing within Morocco, so there's good organic opportunities there to build and grow through the exploration drill bit, but more so than that, we also see some other opportunities regionally to expand our position, looking at potential revenue generating opportunities in the upstream space, where we believe we've got a competitive advantage, but also looking at developing opportunities within the renewable space, and we've identified and screened a number of opportunities within the wind and solar arena within Morocco, and we're screening those. We've screened a few out already, but there's a few others that we're still screening and maturing, so hopefully if those reach a certain bar, then we can start to move forward with potential investments in that space as well. But we obviously would only do that if these have the opportunity to generate a good level of financial return for sound energy investors. Moving on to the finances of the company, I've delivered this message previously that much of the focus over the last 3 years since the new leadership team took the helm at Sound Energy was on restructuring the financial position of the company, as well as restructuring the strategy of the company. So we had to do a lot of housekeeping there to get the finances in order, so to speak, and that obviously enables us to unlock the inherent opportunities that we have within the portfolio. Just as a reminder, we've got almost 300 BCF of discovered 2C resources net to Sound Energy, and about 21 TCF of net unrisked original gas in place as well in the portfolio. But to successfully unlock that opportunity, we need to get the financing in place, both at the working capital level, but also at the investment capital level. So we've done a lot in that domain over the last period. This includes restructuring the corporate bond back in 2021 and really pushing out the financial burden of that bond, which was due for maturity in 2021 to 2027, partially equitising the bond, but also lowering the coupon payment in terms of the cash that's payable during the term of the bond as well. So we've made good progress there on that to restructure the bond, which provides us with the breathing space to move forward with the investments that we're intending to make and we are making within the company. And obviously we've got investment capital as well that we've deployed. We put in place an $18 million loan note with Africa Gas, the buyer of the gas from the phase 1 development, on very attractive commercial terms, a 6% coupon, a 12-year term, a 2-year grace period. So that enabled us to have the financing in place to cover Sound Energy's equity share of the FID budget estimate of the capex necessary to get us to first gas on the phase 1 development. And then in terms of the key financial priorities, really it's about getting sustained revenue from phase 1 and phase 2. Phase 1 obviously is going through the execution phase at the moment, so we're targeting within the relative near term getting revenue from phase 1, and then of course moving on to phase 2, taking FID there, paving the pathway for revenue generation there. And we talk about really very strong revenue generation potential that can be evidenced in the SP Angel research note. It gives a good flavour of the revenue generation potential of the business. But until we get there, we need to live within our means and prudently manage our cost base. So we've made good progress in doing that. We substantially lowered the working capital level of the business since 2019. We maintain strict focus on capital discipline now, and we will going forward. We need to really ensure that we are efficient with the scarce funds that we have, so we continue to manage that as a key component of the financial strategy of the business. And this obviously is in parallel with trying to come up with financial solutions to bring other forms of capital into the company, whether that's vendor financing, whether that's farm-ins or partnering opportunities or bank debt. So there's a number of different elements here that are necessary to give us the funding that we require to unlock the opportunities and the attractive opportunity that we have within the Sound Energy portfolio. So with that, I will hand over to Graham to take us through the ESG story and our sustainability journey.
I think we've all heard the initials ESG, environment, social and governance. Well, Sound Energy adheres to these. We adhere to the UN Sustainable Development Goals, which are appropriate and fit for purpose for our company. We are actively looking at our environmental footprint, and we started measuring our emissions. And we, of course, in our social activity, we hire local people. We work with the local communities in Morocco. On the governance front, we are an AIM-listed company, and we work to the QCA code such that you can be assured that the company is running in a good way, and ESG is the core. This is the glue that is the way we do our business. So let me summarise of where we are. Over the last 2 or 3 years, we have achieved quite a lot. We have a focused executive that is delivering the gas development in Tendrara in 2 stages. The first stage is up and developing. We hope to have production in 2024. The second stage requires FID again in 2024, which will deliver revenue a couple of years later. We still have a large exploration portfolio that, once this infrastructure is in place, will help us exploit that. We're in a growing mode. We'd like to do more. So we're strategic to Morocco. This is Moroccan molecules for Moroccan power. We have a competitive edge in Morocco. We're onshore, so we can stage the development. We have good support from state banks and our shareholders. We have a promising pipeline of delivery from organic growth, but there will be opportunities for inorganic growth as well. We've laid out how we're going to finance these projects and how we're going to move forward, and we want to be a key player in the transition energy business in Morocco in the future. We'll always continue to look at opportunities, but rest assured, Sound Energy is here to deliver gas into the Moroccan market at a very competitive price. We believe that the Sound Energy business in Morocco will deliver great value to all stakeholders.